Hello, traders. Welcome to the Sit on Your Hands podcast. I'm joined by Francis, who I will introduce very shortly. The idea of the Sit on Your Hands podcast is firstly to sort of speak to traders from around the world, get their thoughts and insight on trading, understand their trading journey, and we're also going to take a look at France's strategy as well today. So, all right, so we've got a great show for you guys, and also don't be shy. Come get involved. Say hello, Francis. Hello, Tom. Good afternoon. You know, get involved, guys. And if you've got any questions for Francis, we will take these questions at the end. All right, so don't be afraid. I don't bite. Come get involved. Ask some questions. All right. Yeah, so let's get started. Like I said, this is Francis. Francis is a commodities and Forex trader with over half a decade of consistent profits, guys. All right, so we can learn a lot from Francis today. Francis, how are you?
I'm doing great, Tom. Good to be here.
Yeah, thanks for coming on, Francis. Yeah, like I always say, just be comfortable, be yourself. I know it can be a bit nerve-wracking, but yeah, just the audience are a friendly bunch, I think. I'm not sure. They might be. So yeah, and I understand. So you're commodities and a Forex trader. What are the main assets you trade, Francis?
Okay, basically I do trade gold, and then in the Forex pairs I do trade EU, GBP, USD, and USD CAD.
Okay, so gold, euro, US dollar, pound, US dollar. Okay, all right. So cool. And as it says here, it says over half a decade of consistent profits, which is brilliant. But how long ago did this journey for you start, Francis? I know you've had sort of over 5 years of consistent profits. You showed me your MyFxbook, which was brilliant. But when did your journey really start? How long before that did it start?
Okay, I would say I started 2017, but prior to 2017, right? Because I'm from a family of pharmacists, right? My father is a pharmacist, elder brother is a pharmacist, I too am a pharmacist, yeah. So I do see when people come, with their prescriptions to buy drugs and stuff like that, the health standard was too low. People couldn't afford certain drugs, and on our own end, we can't actually give it out because we have to stay in business, stuff like that. So when I kept on seeing this happening, since I was 15, I do go to our pharmacy shop. I do help out. I see where people complain. I do see how people find it difficult to afford healthcare, stuff like that. So I started, okay, how can this be changed? How can this be changed? And I found out that, okay, the only way this can be changed is for me to actually come in with my own fund. And how can I make a big amount of money, to come into this business and subsidize a lot of things, stuff like that. So I started searching a lot of opportunities, how can I make money and stuff like that. Till I bumped into Forex trading, right? First, I started with this. It was called I think then it was called this option stuff. It was like more like it was more like options. It's called options, whereby if the market goes up, you're making money. Goes down, like it's been counted in a way, unlike Forex. So, but then I didn't like that much till I now started fully 2017 with Forex trading. Learned, went to some academy. I was taught. Though my first year, I said I wanted to do it all on my own, because I like challenge, stuff like that. I feel like, okay, I can do this on my own. But after 2017, it was all hell. Like I lost a lot of money. I even went into debts. Like it was very hard on me then. Like I even felt like quitting the whole thing. So I would say that was when the whole thing started and how the whole thing started, 2017. Yeah.
Okay. Yeah, and what a brilliant story, Francis. Yeah, thanks for sharing. Wanting to subsidize, this healthcare and pharmacy in your country and wanting to create money to help with that. So probably the most noblest reason for starting trading that I've heard, I think. And also, so you obviously like everyone, Francis, when we first start out, you lose money. It's very
Yeah.
rare that we find someone that hasn't lost some money, maybe blown an account or whatever. So, yeah. So in those hard times, Francis, what were some of the obstacles that you really had to overcome? You know, what were some of the steep learning curves that you had in that difficult period?
I would say it's following the path, right? My most obstacle to overcome was following the path because one, I was going for a pharmacy school, right? To improve and learn more about pharmacy and get my degrees and stuff like that. Two, I'm trying to learn how to trade Forex. So the two was too heavy activities for me. So at some point I would drop Forex, right? Because one, the losses were there. I mean, I was losing money in this. I was going broke. I was broke, not going broke. I was dead broke in this. But then I still have to continue with my studies and stuff like that. So my obstacle then was, knowing how to swing the two, right? Keep going on in forex trading and then still maintaining my career in or my still going on with my studies and stuff like that. So that was my biggest obstacle then, right? But I would say everything changed when I went into or when I submitted to mentorship, right? Because that made me to look the longer term rather than looking at my present situation at the moment, right? So that's it.
Okay, and when you say so, you were trying to juggle these two difficult things, you know, trying to get a degree in pharmacy or work on your studies and trade as well. Like you say, that's a heavy load.
Yeah, it's a
Um,
very
and,
load.
and more focusing now on the trading side of things. So you would say the biggest thing that helped you was mentoring. And
Yeah.
what did the mentoring tell you that you didn't know already? What did the mentorship really shed light on?
Okay. Let me put it this way, right? Before I met my mentor, it was more like, you are going to hunt, right? You go into the bush, you don't know where to start. Let's say you're going to hunt for a deer, right?
Mhm.
So you are seeing the whole bush or the whole forest and stuff like that. You don't know where to start from, right? You go this way, you go that way. Night come, morning, you are still all everywhere, like trying to do this, trying to do that. You are trying to invent certain things to know how which one would work. So what I feel like mentorship did for me was like mentorship helped me to see, okay, this is a deer track, right? This is how to know a deer track. This is how to know a deer track, to know the routine that the deer has, right? Because this person has been in this for a very long time, right? So instead of going about the bush and stuff like that, just be here, right? Monitor that track, see the movement, see the routine of the deer, wait for it. That's where the patience come in, right? When the deer comes around, take your shot. And if you don't catch it, go to another position, right? Position yourself well. Hit your target, stay off again. Position yourself, hit your target, stay off again. Position yourself, hit your target, stay off again. That's what mentorship kind of helped me because it's made me to, have more patience in the market. Like because then I was suffering, I had to suffer from this thing called over trading, right?
Yeah, sure.
I
Everyone.
placed a lot of trades in a day, like so stuff like that. So it kind of helped me to shape my understanding to the whole thing and know that okay, this is not something you just go off and do whatever you like. You have to be disciplined, you have to follow a path, you have to know okay, this is what I'm going for and stick with it regardless of whatever happens. Yeah.
Yeah, sure. And it's a really good analogy, you know, when you're hunting, waiting for the deer to come round, because it's a perfect example of you shouldn't chase trades. You need to
Yeah.
let trades come to
Coming
you,
to you.
and
Yeah.
then you take the shot or you take the trade in trading. So, yeah, it's a
Yeah.
really good analogy in that respect. And just the patience to wait for that market to come to you, you know,
Yeah.
and
Yeah.
I think every trader has over traded at the start. I
Yeah.
was 100% guilty of that. I'd see like 100 setups in a day and try and take all of them, you know, and it will never end well.
Yeah.
All right, so great, yeah, interesting. And then, what? So obviously you went through this mentoring and this path to get to, to start seeing some consistency. And
Yeah.
if in those early days, what was some of your strengths? If we think about the three big things, if we think about strategy, which it seems like the mentor helped you
Yeah.
with, if we think about money and risk management, and if we think about psychology, those are the three big things. Obviously, there's a few other
Yeah.
factors, but what would you
Yeah.
say was one of your strengths regarding those three things? What are you good at when it comes to that?
I would say my greatest strength is or was knowing how analyzing the market, right? Knowing the trend of the market. That was my greatest strength then.
Okay.
Yeah.
Yeah.
Analyzing the market and knowing the trend.
Yeah. And
That's my
if
greatest strength in the market.
all my regular viewers, Francis, will be sick to death of me saying understand the structure of the market and the trend. Yeah. Because if you don't
Yeah.
have that, you're driving blind.
Yeah.
Um,
You
yeah.
have no direction. Yeah. That's the thing.
No. And I try not to drive with blind people. It won't end well. um, but if you think of so that was your strength. If you think of something that you really need help with, maybe it was a weakness to start with, or maybe it's still a weakness now. What would you say that is?
Managing my emotions, right?
Okay.
Managing my emotions. It has to do with psychology, right?
Yeah.
So it's not an easy thing, right? When you have attained certain level of consistency, right? You feel overconfident in the market. I don't know if this happens to everyone, I believe, but at some point you feel like a coach, like you know where the market is going, stuff like that. I mean, that's another heavy burden because maintaining your emotions not to trade is a burden, right? Right? The overtrading is bad. But when you have attained a certain level of consistency, holding yourself back not to trade again is a whole new specter of burden on its own. So the emotions that comes with that too, you have to adapt to it also. So being able to adapt consistently into the changing market changing environment is another thing altogether. So my weakness then was the emotions because it's heavy. It's
Yeah.
heavy on me. Yeah.
Yeah. And it's interesting. Normally people speak about psychology when things are going bad, right? But you're talking about psychology when things are going well. And
Yeah.
that's definitely true also. Like you say, you can become overconfident, maybe increase your size, increase risk,
Yeah.
potential trades that aren't there. Yeah, I totally understand that. Okay, and then if you had to, that you're obviously at a consistent level now, what have you done to help your psychology? Is there little routines or little things that you do every day to keep your psychology in check? Any tips or advice for that?
I would say, whatever strategy you are using, right? Try to make it rule based, right? And when you make it rule
Like
based,
mechanical.
yeah, mechanical. Not when you make it rule based and mechanical, it scraps out a lot of things around. Because if you don't see this, if you don't do this, you're not going anywhere. And this is the rules you have to keep. Create it on your own. Give yourself the rule, right? Because no one will be there to give it to you. Do it by yourself. Give yourself certain rules to work with, right? Then if someone brings their own rule and you see that it's in line with yours, maybe you can now maybe shaping a few things to your own rules and keep on moving. So that's the thing, like creating that rules, holding yourself down to those rules and avoiding trading error.
Yeah.
Right? Trading error is not that you did not place your trade, or trading error is that hesitation not to go with your trade. This is your setup. It comes around, it comes to you. That hesitation, removing that hesitation, like some people be like, okay, you have lost 2, 3 trades in a row. There is this hesitation that comes with, okay, this is your setup, but you are scared to place that trade. That's a trading error. Yeah, that's a trading error. You have to keep on with your, regardless of what is happening. You are looking at the long term here. Most people judge their trades by 1 trade or 2 trades or 3 trades. No, you judge your trade by 25 sets of trades or 10 trades or 20. Judge it by that. Then you now know, okay, what is your win rate? From your win rate, you now know, okay, you can have three rows of losses and say, okay, this, but you know within you that this still works, regardless of whatever happens. Yeah, that's it. There.
Yeah,
Keeping
definitely.
back.
Yeah, you almost need a rule for every little element of your strategy. You know, you really do. If XYZ happens, we enter. If XYZ doesn't happen, we don't enter.
Stay off. Yeah.
Yeah, exactly. Yeah, I couldn't agree more. So, you know, talking about your strategy, Francis, but actually, before we get onto strategy, and we will talk about that, guys, if you're enjoying what Francis has to say and you know, some of the tips and advice he's giving you, then please check out the links below the vid. All right, so we've got links to Francis' social media. He also offers some mentorship as well, so please check out his links if you're interested in any of that, and we'll check out his strategy later as well. Now, I really like that though. Yeah, keep the more mechanical the strategy, the less psychology gets involved.
Yeah.
Right. There's almost no room for it. You know.
Yeah.
Totally agree. And then if we think about, you know, you've had constant, you know, over half a decade of consistent profits now, Francis, which is brilliant. And you know, this trading game's not easy, and you know, take my hat off. If you had to write a letter, you know, remember in those dark days when you were losing money and, you know, I bet it felt like you were never going to get out of this. If you had to write a letter to that person, what would that letter say?
I would say the letter will just have one statement. Do not rush it. That's the only thing I'll tell myself. Do not rush it.
Okay.
Take it slow. Yeah, do not rush it.
Yeah. All right. Brilliant. Yeah. Simple enough. And yeah, I totally agree. You know, and again, we always talk about the tortoise and the hare. You know, you want to be the tortoise, just slow, methodical, boring. You know.
Yeah.
So yeah.
The slow way is the first. The slow way is the fastest way to wherever you are going. That's what I would tell anyone into this field. The slow way is the fastest way to wherever you are going. Just compound your activities, compound your efforts.
Yeah, I couldn't agree more.
Little by little, 1% daily, 1% daily, 1% daily, 1% daily. You get to where you are going.
Yeah, exactly. Everyone wants to think trading is a get rich quick scheme, but it's not. Yeah. You know, everyone starts trading. They think, right, you know, what color shall I pick my Ferrari by Christmas? And unfortunately, you know, it's not like that. So yeah, do not rush. Brilliant advice. Yeah, I couldn't agree more. Now, if we think about your strategy a little bit now, Francis, how would you describe yourself as a trader? You a swing trader, intraday, scalper, commodities, Forex, many trades a day, a few trades a day? You know, how would you describe your strategy?
Okay, I work on two strategy, right? The first one, which I'll be sharing on this podcast right here now, I would say is more of a day trader, but then some days might take 2-3 days, right? So, but I would still say it's a day. I'm a day trader, right? Because I trade most times few trades in a week with this particular strategy I'm going to share here. So it's more like whenever I'm managing, let's say I'm managing a very big amount of money, right? I'm managing a very big capital, 6-7 figures, 8 figures, right? I'll go with this particular strategy here, right? I'm going to share here because it kind of gives you time whatever to have other activities in your life. You know, just come to the market, map out your charts, do this, do that, go your way. And within the week, that happens, engage. That doesn't happen, stay off the market.
Yeah. Okay.
Yeah, so I would say I'm a day trader actually in that perspective.
Yeah. Similar. Yeah. I'm a day trader. Yeah, and sometimes trades might take a couple of days to play out, but I still class myself as an intraday trader.
Yeah.
And I also like that concept. You know, the concept of you don't want to be staring at the screen all day, every day. Yeah. Right? You've got a life. You've got other things you want to do. You know, I used to be the same. You see a lot of traders, they're like, they haven't had sunlight for about 2 weeks. You know,
that's
it's not
clear
healthy.
because the more you look at the markets, the more and more you look at the market, definitely you see something. Whether it is wrong or right, the market will present something to you, or your head or your brain will present something to you to engage. Because you have looked to that market for a very long time. I mean, you have spent like 1 hour, 2 hours looking at that chart. At some point, because the more you are looking at the chart, you are feeding your brain with information. You are feeding your brain with information. At some point, the information you are feeding your brain now will counter the information already existing in your brain, right? And definitely you see something to engage with. Now, your emotions will not be bad. Yeah, you'll be pushed to engage into the market. You start seeing things that are not there. When you are now engaged and it goes wrong, you start saying, okay, I shouldn't have done this. These are my mistakes. These are my mistakes. Because you have looked at that chart for a very long time. You are feeding yourself with information that's okay, that might play out on its own. Like you are feeding yourself that, okay, this might play out this way, this might play out that way. And the market is reading. You are watching it. You are there watching the market. But when you offer yourself limited time, 1 hour to highest 1 hour, 30 minutes or thereabouts, watch the market, pinpoint your areas, check out your track. Like I said earlier, the gear track, check it out. Okay, this. I'm expecting this to happen in the market, right? You go off, do your things. Later in the day, you come back again. Maybe 1 hour London session, 1 hour New York session. That's enough for me.
Okay. All right. So so you trade London Open, New York Open, and that's usually enough for you to find a setup.
Okay. Map out your trade. Let the market come to you. Then my second strategy based on just one section, London section, and every day London section, come and check for this. This happen, engage, get out of here. Risk management, 1:2. Get out of here. That does not happen, come back tomorrow. There's no two ways about it. You place only one trade for that day. Every day is one trade. Every day is one trade. Goes good or bad, you leave the market. That's my second strategy. So I made these rules to in a way that my emotions will not come in to my trading, just to check, to create that boundaries. That's how the rules are.
Yeah, and that's a good message to everyone. Yeah, you don't want to be all consumed by trading. Yeah, if you can just see set up in the first hour, 2 hours, great, take it. You either win or lose that trade. Yeah, simple as that. Come back the next day. Yeah, you don't want to be, if you have a losing trade, you're emotionally involved and you might revenge trade. You want to find things that are not there just because you're in front of the screen. Yeah, and that's such a big problem, I would say, for traders. This want of trading. It seems crazy to me. You can't, just let it come to you. Wait for your setup. If it happens, great. If it don't, no trade. Yeah, definitely. Just a couple more questions about your strategy, Francis, then we'll share the charts. So with the strategy you're going to show us today, what kind of win percentage are we talking with this strategy?
Okay, with this particular strategy, right, the win rate on this strategy is around 63-65%. Yeah.
Okay.
So good win rate. And the risk to reward is 1:3 because it runs for the week, right? It's just 1:3 for the win rates. The risk to reward ratio, right? So in a week you can get 2 to 5 trades, depending. Yeah, most times 2 trades. NFP week, that is first week of the month, most times you get 1 to 2 trades because I stay off from Thursday, Friday, and wait for NFP to play out.
Yeah, big news days, sort of stay away.
I don't like to engage in those days because
you're gambling.
It's very rough on those days. So on the second week, you can get 2 to 5 trades, depending. Third week, same thing. Fourth week. So in a month, it might be ranging from 10 to 20 trades in a month. 10 to 20 trades in a month.
Okay. And what do you typically risk per trade, Francis?
I do risk 1%. 1%. Yeah.
Okay. All right.
Okay. Then the bigger the capital, I go lower. to maybe 0.5%. If I'm managing something like $100 million account, I will definitely go down to 0.5% or 0.25% per trade, because the bigger the capital, the lower the risk.
Yes, and you don't need to risk as much to make nice numbers.
Yeah, if you make 5% on a very big account, it's a very big amount of money. So we need not to, gamble it all about. No. I would say maybe I'm a conservative trader. I don't know, but this is the way I, risk it out, or my management
I am
does
all
it.
for conservative. I like turtles and I like conservative. Yeah, me too, Francis. It's how the hedge funds run. They're based on making 2% maximum a month.
Yeah,
If you're
so
making 2% on 20 million, you're doing okay.
yeah, you're doing very okay. I mean, there is no rush for it. Just compound it, let it play out.
Yeah, sure. All right then, Francis. So, all right. So we've got a bit of sort of understanding of the numbers of your strategy. So let's go ahead now and take a look at the chart. I'm just going to add this to the screen. So hopefully this will appear. Wonderful.
Yeah.
The wonders of technology. I did that without the editor, which is quite a breakthrough for me. So Francis, please talk us through, every aspect of it, time frames, what you're looking at, and just, the floor is yours. Please talk us through it.
Okay. So whenever I go to the charts, I usually go all the way to the monthly charts. Yeah. And I do advise anyone watching, whatever strategy you are trading, always go to the monthly. And whatever direction you get from the monthly, going down to the daily, 4 hour, 1 hour, and still being in line with that direction, it helps a lot. It will increase your win rates. Yeah. So I go all the way to the monthly charts, and I do trade the normal ICT strategy, right? Double top, external liquidity, internal liquidity. I do believe market moves external liquidity, internal liquidity. So whenever market takes out any major high or low and runs through it, I look out for, okay, is there any internal liquidity so far that we can come back to, or stuff like that. That's how I do my own analysis. So we're looking at USD CAD currently now, and currently my draw on liquidity here is this high of 1.46. Yeah, 1.46 all the way up here. So that's my draw on liquidity currently on the USD CAD, and the dollar is gaining strength recently. So also I do bring news into my trading too. I do go to Forex Factory. I go to the filter. I remove all the other news apart from the red bourses. Then I remove every other pair apart from the dollar. Yeah. Then I map out my day. So if the news starts on, let's say, dollar, because I trade the major pairs, pound dollar, euro dollar, and dollar Canadian, dollar CAD. So if the dollar news starts on Tuesday or Wednesday, whatever the news starts from, let's say the USD starts from this week, for this week here. Okay, sorry, this is not this week. We are in April, May, Monday to Friday. Yeah. So yeah, the news starts on Thursday, right? Thursday. So I expect the low or high of the week to be formed on Thursday. That's how I apply the news into my trading. I expect the low or high of the week to form on Thursday. Then I go to the charts.
You expect that news to be powerful enough to create a low or a high?
Most times, I do not take that into consideration because these are red boxes, right?
Mm-hmm.
There are, when it comes to this news, there are red box, there is orange box, then yellow, and the red box is the one that creates major impact in the market. Orange do create impact, but not much of that of impact. Then yellow does not create much of impact in the market. So I do, whenever I see a red box, I know that, okay, this news has some form of credibility. And this is how I use it. Maybe there are other ways to use it, I don't know, but this is the particular way I do use it.
Yeah, and I'm just trying to
So I come to
understand that impact, Francis. So you're like, that news will have impact, obviously, because it's a
yeah,
3-star or red rating, and
yeah,
you're expecting on the back of this big news, you're expecting the market to create a high or low for that week.
yeah.
Okay.
So I go to the daily, sorry, the charts. I go to my monthly. My current overall trend here is bullish, right? I'm going for this high, and currently there is a draw on this high. So I go down to the weekly and map out my trade for the week. So for the week, today is Tuesday, right? So for the week, what do I do for the week? I am targeting the high, which is buy side liquidity. So for the week, I will expect the week to take out any sell side liquidity before attacking this buy side liquidity. So what I do for the week is I map out the previous week's low, right? Map it out. Map out the previous week's low. Then I go down to the daily. I do this for every particular pair I'm trading. I go down to the daily. I try to look out, okay, what am I looking at here? Okay, price broke structure here into this range, or what I call it support, yeah, or other block, yeah, into this other block, then moved up. Currently, there is a fair value gap, or some do call it imbalance up here. I believe most people know what is fair value gap because the whole ICT charade happened in YouTube and stuff like that. So I started from chartered student in 2016. My first mentor was a student of ICT, right? So he
Okay.
coached me before ICT took the rest.
Yeah. I know these
So
big fair value gaps are, yeah, big in ICT.
yeah, yeah. So we attacked this fair value gap here. First dipped into it. So this is a new week, and I'm expecting to engage from Thursday, right? So I will expect market to range Monday, Tuesday, Wednesday, right? Create ups and down, ups and down, ups and down, because there is no major news to move the market, right? So on Thursday, I'm expecting the market to drop down here, right, to take this low before going up. But either ways, maybe Monday, Tuesday, Wednesday, market will create a double bottom here, right? Maybe a double bottom here. Today is Tuesday, right? Monday was this Tuesday. So I expect some form of ranging, right? On Thursday, I'm expecting market to take those Monday, Tuesday, Wednesday low before moving up, right? It can go all the way down here, but this price leg here rejected from this other block. So there are chances that market will not come all the way down here, but it will definitely take some sell sides here before reversing on Thursday to go for this current high I'm looking at. So what do? I wait it out. I know the market is ranging here. I wait it out. So on Thursday, I'm expected to engage the market, right? Engage, move up. Friday, continuation pattern.
Before Thursday and that news, Francis, you
Yeah,
won't engage in the market, and does it really matter what price does? What if price
yeah,
on, say, tomorrow breaks
yeah,
through that fair value gap? Let's say it breaks that fair value gap structure. Would you be
yeah.
interested in buying it then, or you're still going to wait for Thursday?
Oh, I'm going to wait for Thursday.
Okay.
I'm going to wait for Thursday because I've seen a lot of, build up of liquidity, right? Markets might go all the way up, take this out, even take this high or out. I mean, this is the market. But then that ranging, there's a reason why I'm waiting for Thursday. Thursday come, I'll map out all the sell sides I can see in the market, right? All the sell side liquidity, all the lows of the day, the Monday, Tuesday, Wednesday, Thursday. I'll map
Yeah.
all of them out.
And I
Then
understand that,
Thursday,
Francis, but what if all those lows aren't taken out, and what if, you know we don't know what Thursday's news will be. You know, Thursday's news could make it go lower than that last low, for example. What do you
Yeah.
need to see on that news day exactly?
On the news day, I need to see the market take out those lows, right? Then I'll go down to the 1 hour. 1 hour.
What if it
If I go
just
down
shoots
to
up?
the 1 hour,
Because the news is very unpredictable. What if that news just makes US dollar, Canadian dollar fly off, bullish, and
keep
it
on going
doesn't
up,
take
right?
out those lows?
Then I have no trade for the week.
Okay.
Yeah, I'll stay off the market because it's just like my dear didn't come around for the day or for the week, so I let it out. Also, I'm looking at GB, pound dollar, and the euro dollar. So definitely one of them might present an opportunity to engage in the market, right?
Okay.
Then this
So
is
let's
my one strategy. I have another strategy just for euro dollar. Then if this does not play out, the other one plays out.
I see.
Hopefully, yeah.
I see. Okay, I understand that. Fine. And then, so what you want to see on Newsday, on Thursday, you want to see price shoot down and take out a lot of these lows. And then,
Yeah.
can you explain, Francis, what exactly you need to see then as well?
Okay. When the market takes out those lows, right? What I do is I go down to my 1 hour, right? This is when I engage, right? I would like to see from my 1 hour a break in structure to the upside, right? From my 1 hour, I would like to see a break in structure from the upside, something like this. This is a break in structure, right? Market broke the structure.
Yeah.
So when there is a break in structure, I go down, I bring out my fibs, I'll map out, yeah, I map it out. Then I check for the discount because you buy in discount, selling premium.
Yeah.
So I go to my discount area. What are the things I can see from my discount area? Here there is a fair value gap. This is a very big fair value gap that encompasses both the premium and discount. Now I either enter here at this, this equilibrium, and then look for a 1:3.
Okay. So you would enter on the 0.5 fib level.
Yeah, look for a 1:3. Yeah, 1:3. Or I can go all the way down to 15 minutes, right? And check to know if there is any other block around here. If there is another block, I'll enter in that particular other block, right? Also, sometimes I do look out for ICT's OTE, optimum trade entry, the 0.618.
Yeah, sure.
See, yeah. See, I
Yeah.
do enter here too, 0.618, and look for my 1:3. That's how I play it out on this particular strategy. And this strategy will give you 2 to 5 setups in a week, depending. Like Thursday now come, I see a breaking structure that goes up, right? I'll enter there and wait for my 1:3. Then on Friday, I'll look for a continuation, maybe another block to engage from and keep on going up till we go for the buy side liquidity. And
Okay.
then take out my 1:3. Yeah. That's how I engage in this particular strategy.
So,
Yeah.
so plotting, if you plot that fib level again, please, Francis. So, just so we can understand entries on the lower time
Okay.
frame. Yeah. So if we can just go back to the H1, and yeah, if we could plot the fib. So, as you plotted it before.
Start from the bodies, not
Okay, you
weeks.
start from the body. Okay.
Yeah, you plot the bodies, not the weeks. Yeah.
Okay. So you've got that 0.5, 0.618 area, and I agree with you. That's like known as the golden zone of fib levels. And why is it known as that? Because it represents value. Like you say, it's a discount. It's a discounted price.
Yeah.
Now, once
Yeah.
price gets down to that level, do you need to see?
Yeah.
Because if we look at H1 structure now, if H1
Yeah.
structure, if price was to make it to the 0.5 fib level, that
Yeah.
for me would be a breakdown in H1 structure.
Okay.
So once it reaches the 0.5 level, do you need to see a break up in structure, like a build up in structure on the H1 or the M15? Do you need to see H1 or M15 in an uptrend to trade from the 0.5 level?
If I do not enter here, right, from the 0.5 level, let's say when I go to the market has rejected off from this 0.5, right? Like you said, I'll look for a breaking structure too, right? Like if you check right here now, market dropped down to 0.5, right? Dropped all the way down again to 0.6, then moved up, right? There is a fair value gap here, right? So market did not respect this fair value gap, right? So market broke through it and then comes back to it. See, broke through, comes back to it. I'll enter here, whereby it breaks through the fair value gap and comes back to the fair value gap. To me, it's a support. Breakthrough, come back, then I'll engage my stop down here. Then 1:3.
Okay, so you're looking for a break of a fair value gap more than a break of structure.
Yeah, either one of the two. Also, if you check for break of structure, yeah. Let me remove this. You see that when market dropped down, went up,
downtrend,
down, goes up again. You see, in the fair value gap, it's filled it up, came down, closed here, then dropped down. So market did not respect going all the way down. It came up again and broke the structure. Right? See, market broke the structure, but it broke it with a wick. Right? I don't like taking trades that market broke with a wick. So I wait it out. Market comes up again, then closed up with a body here. Right? Close up with a body here, then drop down. I'm entering in this other block or here, just within here probably, then my stop down here. So that's it on this particular pair. And also this drop here is in line with the inverse fair value gap here. So that's two confluences right there now. So I just take the trade and watch it run. Goes in my favor, fine. Does not go in my favor, same, fine. I'll wait it out and see what happens next.
Okay, so this strategy you've shown us is basically, just to summarize it, Francis, you're waiting for the big news. For, let's say you trade US dollar, Canadian dollar, you're looking for big US dollar or Canadian dollar news. If you're trading pound US dollar, you're looking for big US dollar or pound news. And then once you see that,
I'm basically looking at dollar news.
Only dollar news. Okay.
Yeah, only dollar news. But before the news, let's say on Wednesday, right? Market comes down and takes this low, this high time frame low, which is a weekly low, right? Let's say on Wednesday, market comes down to this low and takes it out. Now, market has taken out a major sell side. I will definitely go down to the 1 hour and look for a breaking structure.
Okay. So if it breaks that low, you would not be interested in buying anymore, or it depends on what the news does?
No, if it breaks my strategy, right? Let me summarize it here now. Every week I look out for a major sell side or buy side. Like sell side or buy side, depending on my direction in the market. And my direction is gotten from the monthly, right?
Okay.
Now, from
And
this
that's
monthly, my
to
direction in the
buy
market
this
is
pair.
so.
And that was to buy this pair, Francis. Yeah. The
Yeah,
monthly
yeah,
said
yeah.
to
To buy
buy
this
this.
pair. Yeah, from the monthly, the market says to buy, right? So I should be buying in this pair, right? So if I now go down to the weekly, daily, I'm looking out for a sell side that the market can take, right? If the market comes down here today and swipes this low, right, I will definitely go down to the 1 hour to look for a breaking structure, right? So my strategy is based on every week has a liquidity to be hunted,
Okay.
right? Once the liquidity is hunted, eh, I can now engage at the reversal of it. And I'm expecting the liquidity to be hunted to be against my trend,
Sure.
right? So if it goes against my trend to hunt the liquidity, then I can enter fully.
Yeah.
But then if within the week market kept on ranging and the news is on Thursday, right? The news has to be at the end of the week. That is the dollar news. If the dollar news is on Tuesday, definitely I'm expecting a huge impact on this pair
Mm.
today, right? But because there's no news on it, most times markets range, especially on the
Sure.
US, on the dollar pairs. Yeah. But if there is news on card, this market might, make some there might be some volatility in this particular pair because there is news on card. But I
Mm.
do focus more of my energy on the dollar and I've backtested on the dollar and I've been trading on just focusing on the dollar news. So
Okay.
this is my strategy. Yeah.
Dollar is king, as they say. All right, Francis. So
Yeah.
interesting. You've not only adapted some trading concepts with break of structures,
The
FGV
fee.
areas as fair value gaps, FFG
Okay,
areas
yeah.
as well. But you've combined it with the news to give you the
Yeah.
liquidity that you need to take the trade. Yeah. Okay. All right. I like the system. Yeah. Makes sense. And if you see the
Most times
boys,
people,
go on,
yeah,
Francis.
most times people that do trade ICT, they do trade the concepts, right? They are focusing on the concepts alone, and that's a very wrong thing. Like the concepts work when you have used it to con out your own strategy, right? You have
Mm,
to create your own strategy from the concept, not trading the concepts. These are concepts, not strategies. Yeah,
I agree. Yes. You got to
yeah,
make it work for you and what makes sense
yeah,
to you. Yeah.
yeah,
Would agree more. So yeah, I really like it. You're using news to create that liquidity grab, and then that gives
yeah,
you all the confidence you need to take that trade on the higher time frame chart. Where
yeah.
price will want to go mid to long term. Yeah. So yeah, brilliant, Francis. Thank you very much for sharing. We've got a question here. So Shazim Ali has asked, what's an order block?
Okay. Now, order blocks are all down close candles. Let's say I'm bullish, right? Like in this pair now, I'm bullish. All down close candles are order blocks, right? All down close candles are order blocks. This here is another block. All down close candles. This here is another block. But then most people do confuse order blocks. Before you actually say, okay, this is an order block, best be making sure that liquidity has been taken, right? Like before I would call, let's say on Thursday, right? If market swipes this liquidity on Thursday, right? Come Friday and reverse is breaking structure. Come Friday, I'll look for any down close candle and call it an order block because liquidity has been taken, right? For me to look for other blocks here, because of this whole ranging of the market, I'll move a time frame higher, right?
Okay.
Can you see? If you move a time frame higher, it gets easier, right? This is an order block here now. If the market drops down to the order block, this is a down close candle because the liquidity you are going for here now is what's up here. So this is an order block. Market drops, supports it, goes up. Also, before you grade another block, let's say because most times we do say these stuffs, and then you go to the market and say, what is happening here? Okay, let's say here now, in this push up here now. So one can argue that this is an order block, right? This is an order block. But mind you, we are working with what? We are working with liquidity here. Now, if you look at the overall structure of this pair here now, the major draw on liquidity is up here, right? Market moves up, comes down, takes out internal liquidity, right? This is an internal liquidity. Now we are looking for what? The external liquidity. These are our targets, right? And market pushed all the way up here, taking out this high, right? Took out this high. But then it did not take this one out and started to reverse. In this kind of situation, I do map out my fibs, right? I do map out my fibs. If you look closely, right, on these fibs, and before I grade any other block, I'll make sure I'm in line with buy at discount, sell at premium. If you look at this other block here now, this other block technically is in premium.
Yeah.
Right? It's in premium. So because it's in premium, I do not expect the market to buy from here because this other block is in premium. Regardless of our liquidity being up here, if market is reversing, trying to retrace, I would expect market to retrace. Maybe most times I do expect market to retrace to fair value gaps. Like that's my major understanding the market. Most people go for other block. My major use of ICT is what? Fair value gap and external internal liquidity. I only use other blocks in my entry when market has taken liquidity, because then to a newbie it gets easier for them. Because if you try to go to a higher time frame and start looking for your other blocks, you get and you don't have the whole concept learned, because most people will take a few concepts and learn it and then try forcing it on the market, and you don't not apply this idea, this concept of buying in discount and selling in premium. It won't work for you, because definitely you have to buy in discount and sell in premium. This is the basic, even traditional traders use this: buy discount, sell premium. So trying to engage here, trying to buy up this market, you see that you'll be crushed, because this other block here, regardless of it being an other block, it's not where in discount. So the market comes down to this fair value gap in discount and reverse.
And the discount, you would say, is anything not in a buying situation is anything 0.5 fib level or below. You would say that is discount price.
Below the 0.5 fibs. Let me stretch this out. So below the 0.5, anything below the 0.5 is discount.
Yeah, sure. Okay. All right. And Francis. Sorry, carry on.
Also, whenever market takes out any high or low, be wary. Don't just, whenever market takes out any high or low, draw your fibs immediately, because market took out this high here too, this high here. So liquidity was grabbed, a particular liquidity was grabbed. So if I'm in this market, I'll be looking to sell, though I'll be skeptical with it because we still have this high up here.
Yes, but there's a little bit more room there.
Yeah, so but then I'll go down to my weekly and check, okay, what am I seeing in this weekly? What am I seeing? Did the market swipe any buy side or sell side? If market swipes the buy sides, right? First, the market took out this high with this particular week, right? This particular week candle. Then the following week, market still went up to take out the buy sides, then dropped. With this particular move here, I'm looking for, some pullback in price, even all the way down to this other block here first, right? This particular other block here first, because this other block is valid.
Yeah.
But then market respected it to a particular extent then took it out. I mean, with this swing here, this whole swing here, to me, I know that this low is definitely gone.
Yeah.
Even currently now we are in EU. I'm looking at this low to be, yeah, I'm looking at this low as liquidity.
Okay.
Looking at this low as liquidity, because why would I say that? I mapped out my fibs here in this move, right? This other block is here in discount, right? And price respected it here, pushed up, but did not take out this high, right? Then dropped. With this drop here, not respecting this other block, automatically I'm looking at this low as liquidity. And I'm looking at my direction in this EU right now is bearish.
Yes.
So that's it.
And you're looking at that liquidity area as a target.
Yeah.
Yeah. Yeah.
Well, this is for one of my strategies.
Downtrend. Yeah.
Yeah. This is for one of my strategies. The second strategy has to do with AU alone. I mean, the strategy is so simple and very mechanical, in the sense that if I have 10 newbie traders and 10 advanced traders in a room, and I give them these particular rules, right? Because the second strategy has to do with EU, right? London session. This happens, do this. That's only time you have to trade in the day.
Yeah. Very mechanical. It doesn't matter if you're advanced, beginner.
Yeah, it doesn't matter at all.
Yeah.
That's the second strategy I do use. And that one is particularly privileged. Yeah. And it's in a way that.
Yeah, and Francis hasn't shared that strategy today with us, guys. He's shown his other strategy. So if you are interested in learning more about his mechanical strategy that he just spoke about, doesn't matter if you're beginner or advanced, you know, it's very mechanical and easy to follow. So if you are interested in that, guys, then please check out all of the links below the vid, and you'll see Francis on social media. Get in contact, and I'm sure he'll be happy to help you guys. All right.
Just send me a DM in my LinkedIn. Yeah.
Okay. All right. Just send him a DM, guys, and he'll get back to you. So we're running out of time, Francis. So what I'd like to do is just thank you for sharing all of your knowledge, your trading journey, your strategy with us today. Really appreciate it, Francis. And guys, I hope you have too. And if you have, please smash the like button and subscribe to the channel, and go check out Francis's social media. All right, guys, thanks a lot. See you next time.
Yeah.